Hi there and welcome to ET Now. My name is Ashwin Mohan and you're watching our very own budget special India Inc. View PwC survey. We're going to take a quick look at some of the major expectations that corporate India has as far as Arun Jaitley and his A-team are concerned, and to throw more light on some of the results of that survey cutting across several sectors. We have two stellar guests. We have Frank D'Souza from PwC and we have Rajiv Newar from Taj Hotels. Gentlemen, thank you so much for taking out time and joining us on the show. There'll be a third guest in a short while from now, but let's kickstart proceedings first with you, Frank. In the back of the demonetization drive, there is a lot of buzz in corporate India and in the market that this budget could be a populist budget to sort of ease the pain that some of the masses have gone through. Of course, the government is convinced that the long-term benefits are there. But if you look at this particular question, which was posed to the respondents, a staggering 78% feel that Budget 2017 will have populist measures. You concur?
I think the expectation is very high, and there's a lot of emotion in terms of what the expectation is fueled by, and it's understandable in terms of what people had to go through on account of demonetization. In my view, however, one has to consider and give the government time to be able to look at the data which is coming. It's just been a month or even less than a month since the period when people had to put in their cash into the bank has transpired. The RBI is still accepting cash, and all this data has to be analyzed. So I'm not ruling out the fact that there will be some benefit or some measures which will come in on account of what the common man has gone through over the last couple of months. But if you really want to see any big bang changes, if you really want to see our tax base growing from, you have roughly around 1.5% of the population.
Yeah, we are a severely undertaxed nation.
Actually paying tax, and if you want to see any meaningful growth in that, I think you have to give this government some time to analyze the data.
Point taken, Frank. Let's move on to Rajiv now. Rajiv, you represent corporate India, more specifically the hospitality sector. He doesn't seem too optimistic about there being any big bang populist measures. But the government's faced a lot of criticism as well when it comes to the aftermath of demonetization. True. So do you think this is perhaps the best opportunity for Arun Jaitley to woo the masses with a few populist measures on D-Day?
So my expectation is a little different from the budgets. I don't expect that they are going to look at the budget from a one-year horizon perspective. I think they're going to make some radical changes, but they will have some milestones. So that means all the changes will not be affected. They will show us a roadmap that this is what is going to happen in the next 2 to 3 years. And within those 2 to 3 years, there will be a mix of populist measures also, and there'll be some growth initiatives also, because they need to balance the two.
All right. On that note, we're now joined by our third panelist, that's Sunil Kanoria, President of ASSOCHAM. Sunil, thanks so much for taking out time and joining us on this very special budget episode, where we're taking a quick look at some of the key results from the PwC survey. In fact, now let's move on to the second question, and that question was a question where we asked the respondents whether they expect the FM to announce a farm loan waiver considering the big impact of the note ban on the rural economy. Now, here are the results. 41% say yes, 39% say no, and 18% are in fact not in a position to make up their mind. Sunil, what do you make of this response, and do you think there could be some cheer for the rural class in the budget?
Well, there will definitely be cheer to the rural class, but I don't think it will be by way of loan waivers as such. But I think it will be to see how the rural income can be increased, what other support can be given at the rural to the farm. I think there will be definitely measures to do that and support the rural sector growth in the country and the agriculture. But likewise, what we saw last year, there were some fundamental changes done, more particularly to support the farmers and the rural India for growth. So I think that will be more evident rather than working on a loan waiver scheme.
Now, Frank, let's move on to one of the biggest mantras based on which the Modi regime came to power, and that was to curb black money. And that's been one of the major motivations driving the government. A lot of policies have already been announced in that regard. If you look at the budget, there's already a lot that has been done, but are you expecting more stringent measures to control the black money menace? Because if you look at the survey results, it's again a thumping majority. 79% feel that Arun Jaitley will come out with more measures to curb black money in the system.
So in the last 18 months, we have seen a slew of schemes which have come out in terms of encouraging people to declare income.
But
And
specifically, what would you expect from the FM in this budget?
I think
What more can be done, in fact?
in terms of trying to get a clarity in respect of what is it that they're going to do with all the information that they've got, because one of the things that does keep coming up is that should people be scared in respect of how they expect the tax department to respond. I think if the tax department can calibrate its responses in respect of the data which it has received. Remember, they don't have to complete this in 2 months. They have next 4 to 5 years to deal with the data that has been collected now. So if the FM can talk about in terms of how they are going to go about using this data,
Some comfort
in a fair
to avoid
manner,
any discretionary powers in the hands of the tax
exactly,
department.
in a fair manner in terms of how they are going to go about using this data, I think that will be useful to hear.
Sure. Now, Rajiv, you represent the hospitality industry, and of course, that's an industry wherein payments is extremely important. There are different modes of payments which your customers are comfortable with. Many of them have now become more comfortable with online transactions, and therefore, the next question which you posed to our respondents was: do you expect Budget 2017 to contain measures to incentivize digital payments? And 91% say yes. What more do you think can be done on the aspect of incentivizing digital payments?
So, as we have been reading the newspaper, so there is some disincentive if you do cash payments. So that in a way incentivized digitization. The other thing is that if you look at at the restaurants especially and the F&B outlets, a lot of payment actually happens by cash, and that's something which will eventually move into through credit cards or through check payments. But I think there are a lot of people who will actually prefer various other forms of digitized payments also, and even the banks are gearing up for that. So I think this is, if you look at this whole budget, compliance is going to be one of the focus areas, because as Frank already mentioned that about 4% of the Indian population are actually compliant with, are actually tax paying assessees, and only 7 lakh corporates pay tax. So therefore, which is a very small segment of the entire population and the entire number of companies that we have. So obviously, in this budget, there will be compliance, and going into digitization is one of the ways to ensure compliance. So there will be a lot of focus there.
So they both are part and parcel of
and parcel, absolutely.
All right, Sunil. Now let's move on to some of the sweeteners that have been discussed as far as the personal income tax exemption limit is concerned. That currently stands at 2.5 lakhs. Where do you see it going up in the coming fiscal? 39% of our respondents said 3 lakhs, 26% have said 3.5 lakhs, and 34% have said 4 lakhs. So it's quite a mixed bag over here. Do you expect that threshold to be hiked at all in the budget?
Yeah, very clearly that threshold will be increased. That's for sure, we believe. The quantification of that from our side, from the chamber side, what we have recommended is that the government needs to make it 5 lakhs as a base level. You may do away with exemptions, you make it simple so that implementation is easier for most businesses and individuals, because mind you, we must keep in mind that in India it is not only the salaried class people who are paying the minimum taxes. There are businesses, very small businesses which are not into the system, and through this demonetization, through this digital payment, they will be gradually coming into the system now very fast, and we need to ensure that they do not go back into the cash system. They must stay here and continue to take care and pay their normal taxes. So if the taxes are made reasonable, then you will see far better compliance. More so, you have to ease out the way the administration of the tax is done, so that the discretion to the officers at a lower level is not there. But coming to your point in terms of the limits, I think at least 4 lakhs would be there, but our ask is 5 lakhs.
I want to ask you a quick follow-up question, Sunil, and that's on GST. Now, it's pretty clear, the writing is on the wall, that the government is not going to really meet that April deadline. And in that scenario, do you expect a hike in service tax? It's again a mixed bag. Yes, no, can't say. 40% yes, 52% of our respondents have said no. Do you expect any tinkering with the service tax rate in the budget?
Rationally speaking, I don't think they should do anything with the indirect taxes at the moment. I feel that now that there is some more time for the GS to get rolled out, and we know that April it is not going to come in, the request and the feel we feel, I get a sense is that the overall GST rates itself, which was being average talked about as 18% ROR, that needs to be now brought down to 15. So if that is being done, then to increase the service tax rate from this level at this stage does not make sense.
Point taken. It's time now to slip into a short break, but before I do that, Frank as well as Rajiv, quick word on the IT exemption limit. Yes or no? Will it be hiked?
I expect it to be hiked a bit.
And service tax?
Service tax, I believe that there will be a minor hike in it to get it closer to the standard GST rate.
All right. And what about you, Rajiv,
Service
on
tax-
these two aspects?
Service tax, definitely no.
Okay.
IT, yes, because they need to pacify and make some of the individuals happier.
All right. So there is a need to make some of the individuals happy in the aftermath of the demonetization drive. On that note, we'll have to slip into a short break. Continue watching India Inc. View PwC survey. We'll be back in just a bit. Welcome back to our budget special, India Inc. View PwC survey. We were taking a quick look at some of the responses that have come in across corporate India on the key expectations from Arun Jaitley in the budget. Frank, now let's look at the whole scenario from a sectoral perspective. So we asked our respondents, we gave them in fact 4 sectors: rural economy, manufacturing and allied industries, infrastructure, and finally stock market and financial reforms. Which of these sectors will get priorities? We asked them to rank it. Stock markets and financial reforms was at the bottom of the heap. Infrastructure came in third. Manufacturing came in second. Rural economy and agriculture came in first, 54%. What do you make of this ranking, and do you agree with the fact that perhaps rural economy and agriculture will walk away with the major focus?
So it is not surprising. So if I've been looking at the last 2-3 budgets, there has been a focus in terms of how to gear up the rural economy to be able to drive growth. So there are, and the whole element in terms of, there's the other debate in terms of whether this is going to be a growth economy or are we going to take care of the deficit mandates. I think growth is going to be a primary driver, especially in context of the fact that we want to see the rate going up, and the rural economy has to play a significant role in getting that going. So I'm not surprised in terms of why the respondents or why the responses come out in that manner.
Would you concur with that? Are you also not surprised, and was it the writing was on the wall that it had to be rural this time around?
I'm not surprised, but I do believe, but I do expect that the finance minister this time will probably focus on banking and infrastructure and manufacturing as the top 2 focus areas.
Banking and infrastructure and manufacturing.
Manufacturing.
Okay. If I
Because
were
it
to
has
ask you to pick out one sector?
I would say manufacturing will be one. Banking and infrastructure will automatically benefit because of the various initiatives that happen.
Sure. All right. Now let's look at capital markets, Rajiv. You know, the PM had made a statement in the month of December wherein he was very, very clear, very lucid in saying that he's not particularly happy with the kind of taxes that are coming in when it comes to profits made from the capital markets. Of course, the finance minister was quick to clarify the very next day that this does not necessarily mean that long-term capital gains tax exemption, that aspect will be touched. But of course, there can't be any smoke without fire. Will there be measures to boost the capital markets in the budget, Rajiv?
I personally don't think so.
Why would you say that?
I think going by the recent statements which have been made, I don't think this is going to be one of the focus areas of the budgets. In fact, you may see a situation where long-term capital gains could get affected adversely, and even in terms of the capital market, I don't think the focus is going to be there. It's going to be taxed a little more.
All right. You think it's going to be taxed a little more?
I think it's going to be taxed a little more.
In what manner can the government tax the capital markets a little more? See, you know, you have STT, Securities Transaction Tax, you have short-term capital gains tax, you have long-term capital gains tax. There are a lot of, weeding out of grey areas in treaties as well. Which of these taxes is a low-hanging fruit, Frank, which can be touched? Because he's hinting about the fact that perhaps in some particular aspect, some category, the rates may be hiked. So what would you bet on?
So there is, let me answer that differently. So there are 2 elements in terms of what I would be looking for. In my mind, a good budget is a budget which gives a direction. Okay, we can't be living in a situation where year by year you keep on playing ping pong with the tax rates. As long as there's a direction in terms of where the government would like to see the rates finally settle, as has been done in respect of the corporate tax rate.
That's right.
If there's a direction which has been provided that this is how we want to move towards, I think what it does, it gives confidence to the investors in terms of how to plan their affairs.
So correct. So which is why there is buzz about the holding period for eligibility for long-term capital gains tax being perhaps extended from the current 1 year to 2 years. Do you see the government moving in that direction at all, Frank?
I wouldn't discount that, but what I would like to see is providing a framework in terms of how the government wants to move there. Okay, and sticking to it over a period of time, over a 2-3 year period, and moving in that direction gives a sense to everyone in terms of what they want to do. Specifically, I'm a little curious in respect of what they'll do on DDT.
On DDT.
Okay, so we had taxes on shareholders and then moved to companies, and then we had a hybrid situation last year. So are we really going to then move to a situation where basically people pay depending upon how much they earn? So that would be one element which I'm waiting to see in terms of how the finance minister really looks at that.
We'll keep an eye out for that. But if you look at the responses, 40% are optimistic, saying that there will be measures to boost the capital markets. 41% are no, so it's again a mixed bag over there. It's evenly figured out.
Yeah.
What do you make on the capital gains tax structure? Do you think there'll be any tinkering at all? Because historically, any tinkering with the capital gains regime has led to nervousness in the markets. Can the FM afford that this time around?
I hope not.
Okay.
I hope they don't tinker with it, but the expectations are that they are going to tinker with it.
In what way? Do you think short-term capital gains, long-term capital gains?
Okay. Because short-term capital is nothing much to do. It's basically the long-term capital
but
gains.
But don't you think STT, which is a very smooth, wherein the procedure is very, very smooth, it's an automatic collection. Don't you think that should be the low-hanging fruit if you have to increase the rates? Why would you tinker with something that the markets have been so used to for so many years, which is long-term capital gains tax? Where do you stand on that one?
The way I look at it is that I agree with you firstly completely. That is a low-hanging fruit. So that is one of the means to do it.
All right.
But perhaps I definitely feel that the way, if I was to go with some of the recent statements that have been made by the Prime Minister and the Finance Minister, then I believe that there is an indication there that they may tinker with it. Now, whether they do it this year or not is not sure. But at least, as I said in the beginning, that what I am expecting from the budget is that they will come up with a roadmap. And in this, somewhere around the roadmap, they will definitely be tinkering around with these rates and the structure.
All right. Now let's move on to a very important aspect, which is corporate tax rate. Frank, you spoke about the fact that you want the government to give direction. This is an aspect in which the government has given direction in the last budget, that there will be a phased reduction in the corporate tax rate. In fact, there are certain industry lobbies that want the effective corporate tax rate to be as low as 18% minus the exemptions. How much of a pullback do you see in this budget?
I think the roadmap is there. He's going to act upon it. He has to move in a direction where we finally go down to 25%.
I want a figure, Frank.
I think 28% should be something that it should come down to. I know that he did a phase thing of 29% for certain kind of companies last year, but 28% will really get us moving into the direction of where we finally reach the 25% corporate tax rate.
Final word from you, Rajiv, before we wrap up the show.
I expect that the rate would probably go down to 30%, but I will not be surprised if he introduces a new tax which is probably linked to revenues or linked to spends. Because eventually over a period of time, I expect him definitely to bring down the corporate tax rates, but compensating it through tax on spends or on revenue.
All right, there you heard it. All our panelists, Rajiv, as well as Frank, as well as Mr. Kanoria. So a lot of interesting things expected from the FM, especially on the tax front. Expect incentives on digital transactions. There is a hope that there could be certain populist measures to boost the morale of the masses post the demonetization drive. It's a divided jury when it comes to capital markets. That's going to be an important one, which D Street is going to wait and watch out for. But of course, I must thank all my panelists once again for taking out time and joining me on this special show. Rajiv, Frank, as well as Sunil. Thank you so much, gentlemen. Stay tuned to ET Now for more news and updates.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.